Procter & Gamble Corporation is the new market recommendation. Always with an eye to diversification, an interesting sector for investors concerns the goods of large consumption, where multinationals with billions in turnover often operate. In particular, in this recommendation, I want to talk to you about P&G, a leading company in several markets worldwide. Procter & Gamble, P&G, is a U.S. consumer goods group. Specifically, among its products there are air fresheners, laundry and dishwashing detergents, household cleaning detergents, toothpastes and tooth care products, razors and hair removal products, hair and personal care products, cosmetics and creams, children's products, cold products. Procter & Gamble is headquartered in Cincinnati, Ohio, USA. The group can count on over 90,000 employees, distributed in about 100 production plants and 20 research centers. In 2011, it was ranked 5th in the world's most admired companies ranking by Fortune Business magazine, although it does not currently appear in the top 10. Let's see below what are the main areas of interest of Procter & Gamble. Business Unit Procter & Gamble, Health, Baby and Family Care GBU, Therapeutic, Children's and Hygiene Care, Household Care GBU, Care of Fabrics, Home, Coffee and Snacks, Beauty Care GBU, Beauty Care, also personal hygiene products and perfumes, Global Operations, MDO, GBS, and other functions. Procter & Gamble in Italy. Below are some brands of products distributed by the group in the Italian market. Dash, laundry detergents, Mastro Lindo and Viacle, household cleaning detergents, AZ and Oral-B, toothpastes and tooth care products, Gillette and Braun, razors, Head & Shoulders and Pantene, hair care, Olaz, cosmetics and creams, Pampers, diapers and baby products, Vicks, products for sinusitis and colds. Procter & Gamble increased its dividend across 13 presidential administrations. What distinguishes a world-class dividend stock from a medium or poor one? It's probably the ability to keep growing a dividend, no matter what might happen in the world. Dividends are no better than the Dividend Kings, a group of just 44 stocks that have increased dividends for at least 50 consecutive years. With 66 consecutive years of dividend growth to its credit, Procter & Gamble's string of consecutive wins is among the best of the best. But should income-oriented investors buy the stock right now? Let's take a look at Procter & Gamble's fundamentals and valuation to find out. A solid year for business. Procter & Gamble, P&G, reported $80.2 billion in net sales during the fiscal year ended June 30, which equates to a growth rate of 5.3% year over year. What was behind the company's decent net sales growth in fiscal 2022? Famous brands were once again at the center of P&G's continued success last fiscal year. Over many decades, brands such as Love's Baby Diapers, Bounce Tumble Dryer Sheets, and Bounty Paper Towels have become indispensable to millions of consumers around the world. Even iconic brands such as Gillette, Oral-B, Dash, Mastro Lindo, Viacle, and Pampers have become indispensable products, especially in Italy and Europe. Most likely in your lifetime you bought multiple P&G products without knowing who the company that owned these brands was. Now you know it. The company's broad depth of brand power enabled each of its 5 core business segments to record low to high-digit net sales growth during the year. Beauty and grooming activities recorded a 2% growth compared to the period a year ago. The child, women's and family care sector recorded net sales growth of 5% year-on-year. The textiles and home care business recorded net sales growth of 6% compared to the period a year ago. Finally, the healthcare segment reported net sales growth of 9% year over year. P&G as a whole was able to produce net sales growth of 4% in fiscal 2022 through price increases that were passed on to consumers. Thanks to the power of the brand, the volume of products has grown by 2% compared to the period a year ago. Above average net sales growth in the healthcare segment was a positive 1% contribution to the net sales mix. This was more than offset by a 2% headwind on foreign currency conversion, resulting from a stronger US dollar, which is what the company's international net sales are converted into for financial reporting purposes. These factors explain how P&G's net sales increased 5.3% year over year. The company's diluted earnings per share, EPS, increased 5.6% from the year-ago period to $5.81 during the fiscal year. P&G's higher net sales were partially offset by a 40 basis point year-over-year decline in net margin to 18.4% due to rising inflation costs. This was more than offset by a 2.4% reduction in the weighted average of outstanding shares of $2.5 billion for the fiscal year. This explains how diluted EPS grew ahead of net sales in fiscal 2022. Dividend growth is poised to last. P&G offers investors a dividend yield of 2.6%. By context, this is significantly higher than the 1.5% return of the S&P 500 index. And investors can rest assured that the status of the staple food company with the longest dividend growth streak will continue for many more years. P&G's dividend distribution ratio was manageable at 60.6% in the previous fiscal year. This gives the company sufficient reserve to maintain the dividend in case profits should temporarily fall. It also provides P&G with the capital it needs to continue investing in its business, which is why analysts expect annual earnings growth of nearly 5% over the next 5 years. The assessment is still reasonable. P&G is a real gem, yet the stock does not seem to be overvalued. P&G's forward price-to-earnings (PE) ratio of 24 is moderately above the S&P 500's average PE forward ratio of 21.5. The stock is not a bargain at current valuation, but this award is well-deserved considering P&G's track record and growth prospects. I hope you liked the video. In that case, I invite you to subscribe and put a like to support the channel. Thanks for watching. See you in the next one.